Hey gang, this is Dave with Systematic Investors Group, and I just wanted to highlight a new strategy that we're releasing. We released it earlier last week rather, but we are in the process of just announcing it. So I'm going to just kind of go through how this strategy works. First, I'll show you where you can find it. Now, our menu items change from time to time, so currently it is under the trade ideas, free daily trade ideas. So if you click over here, this is actually not a free strategy. It is a pro strategy, but as we release strategies and they're still in beta, we're going to make the signals available for free members to assess them until we actually roll them into our pro strategies, in which case they'll show up on the Pro Daily Trade Ideas section of our website, and they will only be available to paying members. So get it while it's hot, enjoy it while the signals are free. So let's just take a look at where you can get the signals every day. So if you click on this button over here, okay, I have to log in first, so just bear with me here. And I'm going to answer this skill testing question. Okay, so again, let's go under free daily trade ideas, and we'll just scroll down to the FabTech rotation. So this strategy trades the Nasdaq 100 universe of stocks. And let's just take a look at the signals, and I'll explain how this strategy works. Let me just zoom in a little bit here so it's easier to see. So this is the buy scan. Our software set up so that it shows the buy scan and the sell scan. The sell scan is not active because all the signals will actually show up under the action column. Okay, so how this works, and I'll explain that a little bit later. So how this works is if you look at the list, so what this does is it every month on the third last trading day of the month, this strategy takes advantage of the turn of the month, or the monthly rotation into the new month strength in stock. So I believe the phenomenon is called the turn of the month phenomenon. Essentially, close to the end of the month, you get a lot of strength coming into stocks. I think it's probably best described as a result of fund flows coming into the market and buying stocks on sort of a cyclical basis, because that's when big money kind of puts their money to work in the stock market. So it takes advantage of that phenomenon of the turn of the month, and what it does is we rank using an algorithm. Now, this strategy was based on some of Meb Faber's work. If you're not familiar with Meb Faber, you can Google him. He's from Cambria Investments. He's published a lot of good information on rotational strategies, dual momentum. So we've studied quite a bit of his work, and what I did was I went out and I said, okay, here's some good ideas. And what I did was I took those ideas using some aspects of dual momentum and some aspects of his rotational approaches, and I've been experimenting with some of his strategies. So this one is not exactly, the rules are not exactly 100% their rules. It's kind of a combination of what I know about the market and some of the things that I've learned from Meb Faber's work. So essentially what this does is we use the Nasdaq 100 because it is a good momentum-based universe of stocks that responds well to momentum strategies. So we take the Nasdaq 100 on the third, the third last. Okay, let me let me try not to twist my words here. So 3 trading days before the end of the month, we take the universe of stocks and we rank them based on specific ranking algorithms, and we look at relative momentum, and absolute momentum. So we look at a couple of different momentum metrics, and what we do is we rank the stocks in the Nasdaq 100, and the strongest ones are ranked. Obviously, Tesla was ranked number one, from number 1 to 6. So these are the strongest 6 stocks according to our ranking algorithm. And what we do is we just say, okay, we're going to buy those 6 stocks, and the position size is going to be about 16.67% of whatever amount that we've totally allocated to this portfolio. So, for example, if we've allocated $6,000 to the portfolio, then we're essentially going to buy $1,000 each per stock, which roughly works out to 16.67% per position. Now, so you know what 6 stocks have been selected. Now, the date and time is the date and time of the day before the last strategy scan. So you can see this strategy scan was generated on the 22nd of December 2020, really early in the morning, so that you know it's available before you need to act on it in the market each day. This will show up the day before, because these are all of the scans, all of the data is generated on the closing basis. So we will get the information on the close of the prior day. So this is the day before, actionable for the 22nd. So in other words, we generate our scans on the 22nd using closing data from the 21st. So what this is telling you is the rank. The action buy tells you that we still want to hold this in our portfolio. If we were to sell this, if the model were to suggest to sell it, you would see something there that says pound sign. So it would be the pound sign exit. We don't see any of those signals there right now. Now, the buy rotation date is essentially the date that the strategy rotated on. So this is, you can see here, this would have been, I'm going the wrong way here. So November the 27th was the buy day. So it would have ranked the strategy and developed the signals on the 26th. That is 3 trading days before the end of the month. So you have the 30th, the 27th, the 26th. This is the date that the strategy would have been ranked and the signals generated, and then we would have bought the next day on the market open, which was the 27th. So if we follow that logic, the buy rotation date was the 27th. So the number of trading days since the rotation days is 18. So we've essentially been in this position for about 18 days. That's the difference between this date and this date. So the buy date, which was this date, and yesterday's date, which was this. So the price then, the market on open price on execution date, would have been the opening price on this day here. So that would have been $581 excuse me, and 16 cents for Tesla on the buy date. So we use the market on open price of the 27th of November in this case. So now we have yesterday's closing date. Sorry, just had to pause the video there to cough. So yesterday's closing date was $649.86. So the profit and loss dollars are simply the difference between yesterday's closing price and what we purchased Tesla on the 27th of November. So we have profit dollars being $68.70, and this keeps track and updates on a day-to-day basis of all of this data. So the profit and loss percent is 11.82%. In other words, it's basically this price divided by our execution price. So that's essentially how you read the buy scan. This will update every day. So tomorrow this will show 2020 12 22. Okay, it'll show what the closing date and what the closing information was of the close of today, which is December the 22nd. So it's important to note that even though this is a monthly rotation strategy, and it's usually only actionable once a month, it's probably good to just bookmark this page You can bookmark this page and just to check it quickly every day to see if any of the signals are showing pound sign exit, which means that you should essentially exit those positions that are indicated by pound sign exit. Now, this strategy uses different macro filters and regime filters and what I call kill switches. Kill switches are something that I've kind of named kill switches. I've given it that name. I'm going to be talking a little bit about this in the next month or two with the members of Systematic Investors Group. So we've done some interesting work on kill switches, which allow us to get the drawdowns down to a more reasonable level. So that's essentially how the scan works. If we take a look at the back test. By the way, this video is going to be posted on this link once I'm complete it. So if we just jump back to the view backtest link. So the backtest is updated on the close of every week. So every Saturday, all of our backtests are automatically updated, so you can see how the strategy is performed up to the close of the previous Friday. So we'll see here in the assumptions, our backtest goes back to January the 1st, 2000. Our end date for this backtest is December the 18th, 2020. We're assuming that we're investing $100,000 in the backtest. That'll give us 6 positions with 16.67% per position equal weighted. So if we just take a look at the statistics then, you can see this has generated almost $8 million over the last 20 years, which is pretty amazing. It's in the market about 63% of the time. So as I mentioned, those market regime filters, those macro filters, those kill switches will get you out of the market, 38% of the time on average. It has a pretty healthy annual return, average annual return of about 23%. And because it's only in the market about 63% of the time, the risk-adjusted return is even higher at almost 37%. So you can see over the time period we did about almost 1,100 trades. The average between our profit and our losses, this is essentially your expectancy percentage. And if you hover over any one of these, it will give you the description of how it's calculated. But our expectancy is about 2.71% per trade, which is pretty good. Our average bars held is about 20. As you know, it's a monthly momentum rotation strategy. Our winners, we win about 60% of the time, and we lose about 40% of the time on this strategy. You can see that our average win is about 9% per position. Our average loss is about 7%. Now, if you look at the average number of bars in the largest loss is not really important because we're in the position's about 1 month. So if you look at our maximum system drawdown, it was about 30%. So these kinds of strategies where you get larger returns and you're in the market, exposed to the market for an intermediate amount of time, which is about 20 days or 1 month, you're going to get larger drawdowns with strategies that give you larger returns. This is just a function of systematic trading and investing. Anyone who tells you otherwise is essentially blowing smoke. So the biggest drawdown that we incurred over the backtest period was about 30%. Now, obviously, all of our trades have recovered. So this is just something that you have to deal with when you're trading systematic strategies. It's good to combine this kind of strategy with 1 or 2 other strategies that will balance the strategy out. But having said that, once in a while you're going to have a drawdown and it will recover on average. We have our CAR MDD is a healthy 0.77, and in fact our adjusted CAR MDD, if you just look at from 2009 to the present, is well over 1. So it's really quite amazing. Profit factor, profit of our winners divided by the loss of our losers is over 2.19. Our payoff ratio, which is our ratio of our average win divided by our average loss, is a healthy 1.42. So if we just look at the charts, which are a little bit easier to digest, you can see we're hitting new equity highs. This is a logarithmic scale chart, so it's just showing the percentage change. If you look at what other people show, which is basically a linear chart, this would be like going off. This would be going like off the rails, off the chart. But you can even see on a percentage basis, because we've adjusted for compounding. But if it was just, in straight dollars, you would see like a humongous run up in the chart. But this is actually really impressive. We've hit new equity highs just over the last year. Here's our underwater equity chart. Actually, our most recent largest drawdown was just recently at the beginning of 2020, at the end of 2019. So that's good. The chances are you're probably not going to see a large drawdown like that for a little while, hopefully. That's typically what happens, but it's not guaranteed, obviously. If we look at our profit table, you can see we do have some losing years, but you can see we have some really big years. And you can see over the last, like since 2009 when we hit the bottom of the global financial crisis, we've had some pretty good years: 13.5%, 17%, 22%, 25%, 60, almost 68%, 38%. You've had, a smaller year of 7.2, 11, 11.6, 40. You had one losing year in 2018. Which was probably when we hit our maximum drawdown, which would have probably been this month in October of 2018, which makes sense. But look at this year. This year is an incredible 132.9%. Now, this strategy has been in development on and off for the last year or so. And I finalized this strategy last month, and we're just releasing it now because we wanted to do some offline testing. But this strategy has been in development for, almost a year now, off and on. I wish I was trading this strategy. I'm going to start trading it soon with real money as it's coming out of beta. But it's had a really, really healthy year here, which is unusual to see. But suffice to say, it's been a pretty good year. So that's essentially it. This video is a little bit longer than I would have hoped for. Just in summary, the strategy's in beta right now. You can get the signals right here from the free trade ideas for the time being until it comes out of beta and is available for paying members only. So you can see the signals here under View Daily Scan, which will open up a new window. This strategy will be, we will be releasing information to automate it through a Lara Portfolio Manager, which is what we do with most of our strategies. But because it's, it doesn't require a lot of management, it can also be managed manually, and you can track manually the profit and loss and the returns over the month as the month progresses. So I'm going to suggest just looking at this manually. If you're interested in it, just follow it manually. So again, that's where the trade signals are. The backtest is there, and then this video is going to be posted in how it works, basic strategy overview. There will also be a blog post explanation for this, so you'll be able to find it under the articles and blog posts. If you click over here, by the time you watch this, it may be one of the last blog posts. So you can see we did the exact same thing for one of our other strategies, or two of our other strategies that are still in beta. As usual, if you have any questions, you can check our FAQ section here. You can also contact us on the contact here. On the contact link, just go contact SIG. This will send us an email, and just let us know if you have any questions. Get in touch with us. As well, if you haven't already, if you don't understand, exactly what we do, just remember you're just one systematic strategy away from, insert what you're, one systematic strategy away from, more consistency, more success, lower drawdowns. You're one systematic strategy away from basically your success in the market, in my opinion. Now, have a look at our new promo video here. This kind of explains our value proposition. If you're not aware of how systematic strategies and systematic investing can work for you, I suggest you just have a quick look at our 5-minute explainer video on our website and reach out. Let us know if you have any questions. We're about 20 minutes in this video. I'm going to stop it here. I look forward to hearing from you, and I hope this strategy helps you on your road to success, becoming a systematic trader and a systematic investor. Bye for now.